Yeah, absolutely. So normally we see risk on being something that drives Bitcoin up, but over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? I mean, we're even seeing the banks selling off a little bit today, and that's not even driving Bitcoin to the upside. So the biggest thing to do here is look at the chart. And I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, this is amazing. We're going back to the levels that were the lows during the bull market. And that's where Bitcoin is hovering just underneath. And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand. And if Bitcoin can't get through this, it's still bear market central.
Bitcoin is still on track to hit $180,000 in its next halving cycle, a longtime market participant said. With BTC USD approaching $30,000, but traders highly suspicious of the 2023 rally, sky-high BTC price predictions have been poorly received. Two current $1 million forecasts from ARK Invest CEO Cathie Wood and former Coinbase executive Balaji Srinivasan, respectively, continue to divide opinion in the aftermath of the 2022 crypto winter. Hello and welcome to Money Talks. In today's video, founder and chief market strategist at InTheMoneyStocks.com and verified crypto investing, Gareth Soloway updates about Bitcoin's current market standing and his outlook for Bitcoin in 2023.
Yeah, I'd love to say I have, but I haven't yet. And the key is this level, right? So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point then I say, okay, listen, we're back above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000 as of now.
Okay.
Yeah, so it absolutely does. But the key is that doesn't trump fear. It doesn't trump emotion. And so for me, as soon as the banking crisis started, I said to myself, all right, this is exactly why Bitcoin was created. This is the essence of why we need Bitcoin. But again, in the shorter term, when you see panic, like when you go back to the COVID 2020 March period where things were in really a panic central, you saw even gold selling off because during panic, people don't ask questions. They sell, they ask those questions later. And I think that's what we're coming into. We're coming into a period in the equity markets where I think you're going to get a realization there's a recession. I know we'll talk the S&P in a little while, but you're going to get this sell-off in the stock market. My guess is it bleeds into crypto and it creates more selling in crypto to the downside.
Okay.
Yeah, so if we get above 30,000, and I think this is key, is that a break above for a day or two, that doesn't matter to me. I've seen algorithms that'll do that purposely to stop people out or actually convince people that last little bit of FOMO to jump in on board. Think about the 65,000, which was the early 2021 high, and the 69,000 level where it convinced everyone we were headed to 100,000. But if we stay above there for a significant amount of time, a week or so, then likely that tells us that we are going to head even higher. Your next leg probably has the chance to take us up towards that 35, 40,000 level probably over the next month or so.
Considering whether either has merit, Philb turned to raw math to determine some likely macro tops and bottoms for Bitcoin after its next block subsidy halving. Due at the end of March next year, the halving will again cut the block reward paid to miners by 50%. In prior 4-year cycles after previous halvings, BTC USD has displayed patterns of behavior that continue to hold true today. When using days from the Bitcoin halving, where the inflation rate of new Bitcoins is halves, we can see that Bitcoin peaks around 368,550 days post-halving. and then bottom 779, 914 days post-cycle. Philb summarized. Thus, in line with 2013, 2017, and 2021, 2025 should see a double-top setup, in which Bitcoin peaks above $200,000 twice. The corresponding bear market low a year later centers around $50,000 according to the calculations. While acknowledging that price volatility and relative blow-off top trajectory will decrease over time, Philb reasons that overall global trends toward digital stores of value will aid Bitcoin bulls. Nonetheless, for his part, he believes that the next cycle will bring a slightly lower high than the numbers suggest, around $180,000, already in place since February. I recently stated $180K is the target next cycle. I will stick to that for now, he concluded.
Yeah, I mean, it's so tough to know what the heck's going on here. I mean, you know, Elon Musk, again, he loves catering to the crowd, to kind of the smaller investor, the retail crowd. And so on a technical basis, we can see that you actually had this beautiful kind of what we call a wedge pattern. It's a triangle pattern, and we broke above it. But on a technical basis, look at where we went. We went right back to the highs of February of 2023, and that's where price stalled out. So again, I think in terms of this becoming a mainstream asset, the only way that happens is if he really incorporates Doge into Twitter as a form of payment. That could then give it some relevancy. Otherwise, I always sell these type of events because, again, I still remember when he came out and he was pumping it and he went on Saturday Night Live. That was actually the high of the asset back then. And to me, it's more you sell these type of crazed pumps where everyone's FOMOing it.
So do not buy the hype here.
Yeah, I wouldn't. It's just, again, it's one of those things you could 2x your money, but you could also go to zero. So for me, when I'm investing hard-earned money, I want probabilities heavily on my side. In this case, there's not probabilities heavily on my side. We can flip over to the S&P 500, and I think it's important to recognize that the S&P has really gone nowhere in a long period of time. That's actually not a good thing. When you have a big drop from the all-time highs and then you get into this consolidation pattern, what it tells you is there's an equal amount of buyers and sellers, and that's why price is chopping sideways, right? One seller equals one buyer. Problem is, we know the retail crowd continues to be buy the dippers. So why haven't we gone higher? The answer is smart money, big money, institutional money is likely selling into it. So ultimately, my guess is we have another leg down in the second half of the year. We retest and actually take out the October lows and probably head down towards that pre-COVID high here on the chart. So I do have a downside price target at minimum by year end of 3,300 and change. I do think worst case we could even touch 3,000.
What kind of correction is that in percentage terms, Gareth, that you're looking at?
Yeah, from 4,000 to, let's say, 3,000, we're talking about a 25% drop from here. So again, I think the second half is going to be, I mean, this is going to be the kicker for the second half, is it's going to be a point where investors finally realize that we are definitely going into a recession and that the Fed can't bail us out by cutting rates aggressively or printing money because inflation is so high. All right, in the past, in the last 10, 15 years, any sort of blip in the screen, case in point, 2018 in December, when markets dropped about 20% in 6 weeks, the Fed started cutting rates immediately. They could do that because inflation was sub 2%. They could do what they did in COVID because inflation was sub 2%. You can't do that with inflation up above 2% or 3%, as I think it's going to stick around. And that's going to be a realization that is scary for the market. It's like a child where the bumper sides get removed. You're now open to get hurt by the reality of the market, and that's going to be pretty scary for the markets. You're going to see a big sell-off when that realization happens.
So, what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.